investing sustainably is one thing, but prove it to me that you really do invest my money sustainably. So we were driven by this idea of making this transparent. And so this is where really the Globalance footprint came from, that we wanted to demonstrate what my money actually does. What is the impact of my money to the global economy, to society, and indeed, obviously, also to the environment.
Welcome back to another edition here on Mentory TV, where in our current series, we are focusing on the theme From Crisis to Creation. I'm Patricia Falco-Becali, your host. And before introducing our theme for this week, let me first of all say thank you. Thank you all for subscribing, following, and being so interactive, always coming through with either new ideas and comments and insights, adding to the conversation that I tend to hold with the masterminds I have here on the show on Mentory TV. So thank you, keep it up. And as you know, I get back to all of you individually with my thoughts. And now let's start with the actual focus of this show. I thought it was about time to have a closer look at sustainable finance, ESG investments. And you may think, well, what's so new about that? It's been around for donkey's years. True, but a couple of things. First of all, during 2020, so if you want to call it the height of the COVID-19 pandemic, we had an incredible surge into ESG investments. Why, I want to know. If you look, for example, at the investments into green bonds, they hit an all-time high during 2020, almost reaching $490 billion globally spent on this kind of investments. So what's happening? Are we still in the zeitgeist of ESG investments are a fad? Or are ESG and sustainable investments the thing of the future, the thing of maybe your financial future, your future of the planet and well-being as such? So I thought, why not reach out to Urs Landolt? He's one of the co-partners, co-founders of Globalance Bank here in Switzerland. It's a small private bank. And hey, it's one of those pioneers and big pushers in this type of investments. Urs, thank you so much for being with us here on Mentory TV.
Thank you very much for having me.
Well, let's kick off our conversation straight away and let's introduce our audience, our community, Urs, to what Globalance Bank actually is.
What is Globalance? Well, it is a bank. It is a private bank. It is a Swiss-based private bank. It is an owner-run private bank. Or you could call us also, if you like, a boutique or a pure play sustainable asset manager. I think we consider ourselves a pioneer in this particular field, having roots going back to 1995, when the predecessor company has been founded. I think in that sense, as this famous Swiss company's advertisement goes, wer hat's erfunden? I think we consider ourselves the ones that really have brought this to the Swiss banking market. We were the first ones to launch a private equity alternative energy fund. We were the first ones to launch a water fund. We have founded the still prevailing Dow Jones Sustainability Index, where SAM, the company we then worked for, and we left back in 2008, Sustainable Asset Management, they are still the delivery, if you like, the ones that deliver the ingredients still today to the Dow Jones Sustainability Index. So really we are, our DNA is sustainability, and we try to bring this to our clients.
Well, it's an interesting one because you mentioned SAM, the fund, I think that was introduced back in 1995 by your current CEO, Reto Riga. And he said in one of the comments, it was just too early for the market, that they were pioneers, but the zeitgeist wasn't just ready for people to take sustainability and whatever ESG really includes seriously enough in order to make the comparison investment equals also making money and a certain return.
Very true, very true. I think for a number of years, we were regarded as the greenists, if you like, the crazy ones, and the prevailing sort of view in the market by many maybe less oriented investors was like, well, sustainability is nice, but actually it doesn't perform. And I think that, I hope, has been proven wrong. And looking at the current, if you like, development, given that we see sustainability in the investment management environment becoming more and more mainstream, I think we have proven them wrong.
Yeah, no, I think the performance is a really important issue there. And I think it was actually last year that quite a few of these ESG funds and stocks have outperformed the non-ESG inclusive indices across the globe. There were interesting studies out there. Let's talk a little bit about the details, how your investment strategy is actually implemented, Urs. And as far as I could see from the research, there are certain megatrends that guide whatever ESG is all about, and which then eventually is also the convincing factor for potential investors.
True. As I mentioned before, sustainability is not just fashionable. I think it's definitely here to stay. It's becoming more and more mainstream. In reality, I think what we're seeing out there is more and more bipolar world, if you like. We have the sort of, well, easily said, we have sort of the old economy type of industries, and we have the new type of new economy type of industries. And a company, if you like, without owning a single car, or take Airbnb, the world's largest housing or hotel company, without owning any brick or mortar. So new business models are coming up, some of them very disruptive, and I think a lot of the old economy industries are having an awakening here, really. And it's also, when we talk about megatrends, I think it is trying to capture that growth potential that these megatrends have. I think that is key, and integrating that in a sustainable environment, a sustainable investment environment.
Mm-hmm. And these megatrends, which one would you say is pushing most right now? Is it really down to climate change?
Well, I mean, definitely. I mean, climate change, that's definitely at the forefront has to be at the forefront of any investment decision in an investment house such as ours, or actually in any company out there trying to survive. Yeah, it is climate change and renewable or new energies. I would say it's a scarcity of resources, which is another aspect that needs to be taken. New mobility. I mean, when you talk about new and old economy, you would immediately think of, I don't know, General Motors versus Tesla. So new mobility is definitely a subject. But the entire aspect of digitalization, which has been now given more headwinds, if you like, due to the Corona situation, automation, robotics, but also gender questions or health and age. I mean, just one fact is that these days, this is how, if you like, wrong the current environment is. These days, more people die of too many calories than people die of too few calories. I mean, how insane is that? So yes, health and age is definitely another subject that we're looking at.
And the interesting thing there was, on one hand, you talk about scarcity. And I think one of the statistics that you quote as well is by 2050, we do have so many more mouths to feed, more than 9 billion people, that there will be food scarcity. We need about 70% more food than we have right now. At the same time, we have this megatrend that there are more people overweight right as we speak than underweight in the world. So it really is not only a complex place, a complex complex world, but one that is full of juxtapositions, total opposites. And to navigate your investment successfully through that is of course an interesting thing.
Absolutely.
My question is, to what extent does really ESG investment guarantee that we will face a more, sustainable and resilient portfolio, and also more resilient world with all these megatrends coming upon us?
Yeah, I think you can view sustainable portfolios or sustainability in two type of ways, or actually we see two types of investors, if you like, be they private, be they institutional. We have a community that, this is a small community, but that is foremostly driven by their values. Think of a family that tries to pass on wealth from one generation to the next, or think of a maybe a non-profit organization or whatever. So investors that are driven by their values rather than by yields or by returns, those we would call believers. They are truly in this, and again, sustainability or the way that sustainability integrates their values is far more important than return. Yeah. The majority of investors, the main investors, they simply are convinced that the integration of what we call extra financial aspects, in addition to the traditional financial analysis, okay, that any investment house will take into account. So including additionally these extra financials gives these investors a more robust, a more stable, a more sustainable portfolio. And what that does, in other words, it is a means of reducing risks in your portfolio. That is what it is about. That's about being green. It's not about being, yeah.
No, sorry.
No, it's okay.
No, I think this is a very substantial point you were saying about risk mitigation. So if I hear you right, Urs, first of all, if you look at the portfolio and the way you structure it, okay, it needs to be a given that whatever company you're investing in, be it as a PE institution, be it like an asset manager, needs to have a profit, needs to have a viable business as in the business model. So the return is something that is a given. And then what the ESG really signifies, or the mega trends or the risk mitigation, is really what is on top, driven by your values, which go perhaps a little bit deeper than the pockets, because the pockets is a given, right?
Correct. We often argue that these type of investors, this second category of investors, the majority of investors, they actually want the best of two worlds, and quite rightly so. I mean, they have every right to expect that. They want a portfolio that yields them a return which is comparable, if not better, than what they would get anywhere else, or if they would not invest sustainably. So it's the financial return, plus they want a good feeling about their investors. They don't want to wake up one morning to hear that whatever company they're invested in have, child labor, or have spoiled the Gulf of Mexico or whatever. So we often refer to this dual or double yield, double return. This is what we refer to. But considering everything, again, what is very important is that these investors expect a market-conform return.
Yes. Absolutely. Yes. And I think they are right, as you were saying, but they're looking for a couple of sweet spots here. You have A, the return, and B, the feel-good factor or the fair factor in terms of doing business in the business they're investing in. And there's a couple of things I need to pick up on. And one of the things you established already back in 2012 was Globalance footprint. Now, I thought that was interesting because that is also, I think, the first step into what you recently launched. We'll talk about later on, Globalance World, because it gives actually what I would call, and if I understand it rightly, was transparency into the entire supply chain of whatever entity you actually have invested through your portfolio.
Correct. mother of that idea really was, if you like, looking into our industry. And in reality, our industry, the investment industry, has not had much innovation over the last 20, 30 years. If you, it's now early February, we all have received probably from our bank the year-end reports. And if you sort of pop that one up in front of your mind, you know, it gives you the return, it gives you a lot of other information, but the reality is that the majority of clients can't read them. They are Excel type of listings of stocks with strange sort of abbreviations that very a lot of people will not understand. So investing sustainably is one thing, but prove it to me that you really do invest my money sustainably. So we were driven by this idea of making this transparent. And so this is where really the Globalance footprint came from, that we wanted to demonstrate what my money actually does. What is the impact of my money to the global economy, to society, and indeed, obviously, also to the environment. And that is really what Globalance footprint does. It tracks the impact of my investments.
Yeah, and that is the intricate thing. That's a fascinating thing, Urs, but the intricate thing as well, because I'm a data freak. I like data, but I also know that one thing is to get data. The other thing is to, validify that data, know where it's sourced from, have that data be not only credible, but actually tell me something in terms of metrics that are important. How difficult is it, A, to get a certain amount, the right quantity of data, and make sure that the data is of highest quality in order to give me as an investor really the sense of security? Yes, my values are being respected all through the supply chain of the company I'm investing in.
Very good question. Well, in the early stage, we had a whole host of analysts, and we would have to, if you like, develop the data ourselves. And thanks God, that has changed. There are a lot of organizations that do make a lot of calculations and do deliver the data. Anybody can buy them. I think the art is, what do I do with it, and how do I weight it? I mean, so therefore, I think this is where our long-term experience in this field helps us. So what we do is we buy raw data from close to a dozen or so providers, private or semi-government or governmental institutions, and we give it our own weighting, if you like. We sort of manage those data in order to make it readable for clients, also able to interpret by these clients at the end of the day.
So Urs, we've kind of touched on the newly launched product at Globalance Bank, which is Globalance World. I played around with this interactive platform. It has a huge amount of gamification, and it is very much showing what your money really does across the globe. A, where it's invested, and B, what the footprint is. And perhaps you want to share with us your demo version and show us how we can imagine this to work.
Happy to do this. Thank you very much. So you should be able to see this.
Yes, financial returns. Yes, and it's moving. Yes.
And the globe is moving, doesn't it?
Yes.
Okay, basically. So this gives you what the portfolio really does here is, or Globalance World does here is a maximum transparency of your portfolio. It is a Google Earth of your portfolio. It gives you the returns. It shows you the extent to which you're invested in the megatrends that you obviously want to be invested in. It shows you what the footprint of your portfolio does. And then absolutely a world's first is it shows you the climate path your portfolio is on. So you can look at the portfolio. You can, for all of these, you can actually look at the globe here, and you can move the globe. You can see this.
Yes.
You can expand You can jump into any country and you'll see that in Italy, the major exposure you have through Alphabet, Apple, and Microsoft, as an example. You go into the portfolio, it demonstrates, here you have on this line here, all the different companies. Panasonic is doing best year to date with 13%, as opposed to Edwards, which is -9. You have all this information. You can jump into these companies and you get all that information.
These are the portfolios. Let's have a look at what I thought was incredible. It shows you really where and what companies have what global warming impact in their business performance and their business practices. And I thought that was very interesting for, now with our targets, Paris Agreement, as well as the UN goals coming out there, putting a lot of pressure on the private sector really to get to those targets. And you show full transparency on that. But what I thought was very interesting in this setup. So if you look at the big, at the top here, what you can put in is what sort of indices you want to compare. So you have the MSCI World Index, and then you have DAX, FTSE, et cetera, et cetera. So I kept it with MSCI World, and then I put the S&P 500 just to, compare a couple of very important, let's say, indices that a lot of funds trace.
Or you can compare your own portfolio with any of these indices, and it gives you a view on again on what the megatrends are, to what extent you're invested there. It gives you the warming potential, gives you the footprint, and gives you obviously the returns. Yes.
Exactly. And what I thought was really interesting was for me, especially was the climate. Okay. Because it's on the forefront, as we were discussing earlier on, was of everybody's minds, on, government's minds, investors' minds, and of course, consumer minds. So what you have here is the overall amount of degrees centigrade, I think, compared to the target of 2%, right? So 2%.
Or even 1.5 as the Paris.
True. Getting tougher by the minute. And that means that this is actually worse. And S&P 500, 3.3 degrees also. So here it shows you, and maybe you want to talk us through this, that the MSCI World has these kind of data and results, and the S&P 500 has that. And then what I thought was interesting, the top 5 companies actually getting closest to the Paris Agreement you just mentioned are actually listed, and they're part of the portfolio, and the bottom companies.
Correct.
Right.
Correct.
So that means to us consumers exactly what? What does this map really tell us when we decide upon our future investment strategy?
Well, it tells you basically 2 things. It tells you, one, if you buy the market, you buy a lot of these in terms of climate path, a lot of these red companies, these, in that context at least, bad companies. If you buy the market, you not only buy the best ones, you also buy the worst ones. That's number one. So for clients being aware of this, or clients wanting to escape this sort of trap, if you like, there is no other way than being selective and not buying indices. I mean, that's yes. Answer number one. And answer number two is, we must be aware of we must be mindful of the fact that only about 15%, only 15 roughly percent of global listed companies actually are 2 degrees or better. I mean, we also must be aware that the majority of companies actually still have a long way to go and try to improve their climate path. Yeah. Otherwise, we will not be getting where yeah. we all want to get by the middle of the century.
Yeah, absolutely. And it's around the corner. And I think what is interesting in this kind of context you just said, Urs, is that before I even invest into any kind of ESG portfolio or think about the investment, be it with Globalance, be it with another asset manager, I can go onto Globalance World and say, okay, the bottom 5 companies in terms of their footprint are Philip Morris, Monster, Garmin, whatever, American Tobacco, means that if I buy any of your or anybody else's fund, I can watch out, do they have this company inside, yes or no, and can make an active and informed decision, because it doesn't adhere 100%.
Or even more precise, if you, for whatever reason, intends to invest in company X or Y, you have a search function here. You give the name of that very company, and it will give you all that information. Okay, so it's an aid, it's a help for your decision-making process, if you like.
I wonder, when are you going to get into trouble at Globalance from all those companies? Because, it makes it so easy and transparent for even Joe Blogs to know what may be behind a big brand.
We would love that
you might get, you're like a whistleblower. You're the whistleblower.
We would love that interaction with companies. We would love to do that. Absolutely. We are not, we would be happy about that.
No, yeah, because for me, it was like, I thought, okay, that's great. It's guidance for me. And I said, hang on, but this is like a name and shame list, if you think about it. And if this kind of setup that you have, this kind of platform really goes viral, then gosh, will companies really make everything possible to get their act cleaned up, literally ASAP.
And it's, we draw this information from very reputable sources. Similarly, insurance companies or reinsurance companies would use the same data in order to calculate their risk. So it's not something we sort of came up with one sunny morning, and it's very, very reliable data. And yeah, I think a lot of company executives should actually start to look into this, and again, climate risks are also economic risks for me as an investor, but also for these companies. So it's not just that these companies should pay attention to this in order to please a more and more greenish type of an investment world. Also for their very own shareholders, it would be beneficial if they would be looking into this.
Yeah, you mentioned the insurers and the reinsurers. If any sector has been suffering due to, these catastrophes, climate catastrophes and weather catastrophes we've seen as of late, it was that sector in particular. And I totally agree with you. Climate change has gone so far that it impacts everybody. And this is why last year, for the first time at the World Economic Forum in 2020, for the first time, the business community actually saw climate change and the impact of climate change as the first economic risk to our world. So there is a direct link now between nature, looking after nature, and our economic well-being, which brings me, of course, to the issue of, recovery and rebuilding our world the green way. And that wraps up the first part of my conversation with Urs Landolt, one of the co-founders of Globalance Bank here in Switzerland, looking at ESG investments. And if you do like my conversations I have here on Mentory TV with my mastermind guests, well, why don't you subscribe and also hit the bell button, share, and like our videos so more and more people can get the benefit to see those conversations. And also, I will keep you always informed with my newest releases.